Hello, everyone, and welcome to the second webinar series exclusively for mutual clients of Farm Focus and Rabobank. Many of you attended the session last week, so thanks very much for that, and thanks for coming back. That's always a good sign. So my name's Hamish Mitchley. I'm the Head of Business Development for Rabobank here in New Zealand, and I've been agri-banking for past 30 years. I'm ringing in again from our Gisborne office this week, same as last week. So last week, many of you would have been on that call. I talked a lot about how Rabobank was started 125 years ago. So I'll just make a few other comments today so as not to repeat myself there. So Rabobank is a cooperative bank that banks the whole market within the Netherlands. We are over there the largest residential lender in that market, but we also bank 85% of all agricultural loans in the Netherlands. And that's because we were started by farmers for farmers, and we've really stayed strong to that commitment. And whilst the Netherlands is a pretty small country by geographical size compared with New Zealand, it has a huge amount of agricultural production and export throughout Europe and the rest of the world. So outside of the Netherlands, we are a food and agri specialist bank and operate out of countries that are seen as food baskets for the global economy. And our mission is to grow a better world together, or here in New Zealand, to grow a better New Zealand together. We don't pay any dividends to anyone, and no profits from New Zealand have ever been sent overseas since we were established here in New Zealand almost 30 years ago. Our profits are either reinvested into our balance sheet here to help us grow and support New Zealand farmers grow their business, or invested into the Rabo Foundation in New Zealand here, where we support community initiatives that are focused on food and agriculture, such as things like Growing Future Farmers, agricultural in schools, or financial workshops, but there's many other things that we support there. So we're now the third largest agri banker in New Zealand, and through our sole focus on agri, we aim to be the largest lender in the New Zealand agri market over the next few years. I'm just going to hand over to Annie Cates from Farm Focus now to introduce herself, and then I'll make a couple of other comments. Thanks, Annie.
That's great. Thank you for that, Hamish, and thank you for joining us all today. So my name's Annie. I am an agri and training advisor here at Farm Focus. I've been part of the team here for over 7 years. And my husband and I also farm sheep and beef here in the Wairarapa, and are also part of a dairy farm and equity partnership. So Farm Focus is financial management software that was built specifically for farming businesses. So we first started right here in the Wairarapa in the 1980s, when it was a hard time in the farming industry. Interest rates were high and margins were tight. Our founders saw a real need for farmers to understand their financial position and for them to budget. They had to work to build those resilient businesses that could survive the tough times and come out the other side. So the first iteration of our software was posted out snail mail on floppy disks, long before we had dial-up internet. So over the years, we have grown and developed to meet the needs of our farmers. We're a passionate bunch here, from the development team at one end of the building right through to the support team at the other. We're still based here in Masterton today and are committed to supporting our farmers as much today as we were 40 years ago. I just wanted to mention briefly or talk briefly about the importance of planning. We're going to go through some planning and reporting today. So it's really a challenging time out there just now. It's across the whole industry. It's feeling pretty hard. To navigate those tough times, it's important that we've got a clear understanding and a clear picture of where we're headed. Having that realistic budget in place allows us to explore options. We can make informed decisions, and it puts us in the strongest position that we can be in. So understanding that financial position and sharing that information with the bank ensures that our cash flow requirements are met, and it gives the bank confidence in us. The earlier we can get that communication through, the better from the banking side. Having a plan gives us a real peace of mind and a sense of control. It's important to control those controllables, and certainly for me, having a budget and having it on paper and knowing where we're going really helps me sleep at night. So what we're going to go through today will allow us to look at how we can set goals, make those informed decisions, and position ourselves ready for opportunities that will present themselves. Did you have anything else you wanted to say further on that, Hamish?
No, look, I just really reiterate and support everything you've said there, Annie. Look, we recognise that agriculture is cyclical. We're at a down part of that cycle at the moment, particularly with farm cost inflation, higher interest rates and lower commodities, and also the challenges we've had around the weather over the last season, Cyclone Gabriel and so forth. So, yeah, but look, we do believe that they are cycles. We come out the other side of them, and we'll be stronger for it. But it's really important through these times that we use software and planning sessions like Farm Focus, and particularly the session we're going through today to really plan and do scenario analysis to look at what levers we can pull. And that's not to say everyone's going to get through this without making a loss. If we go back to 2015-16 and the dairy downturn, I think banks collectively lent the dairy industry about $3 billion. Because they lost about the industry lost about $2 per kg of milk solids over that time. So no matter what levers you pull doesn't necessarily mean to say you're always going to come out with a profit, but it means to say that you know where you are going and you're minimising sort of losses, so as you're in a resilient position to spring back at the other end. So as I've said at the start, we are a food and agribusiness bank. We're not redirecting our money anywhere else just because of the downturn. We will ride out the cycles with you, our clients, and for that we thank you very much for your business. We don't take that lightly and fully appreciate it. And just once again, thanks to Annie and the team at Farm Focus for providing this free webinar. Really hope you get something out of it. Thanks very much, Annie.
Awesome, thank you, Hamish. So today's webinar, first of all, before we think about creating a new budget, we first need to make sure that our actuals today are tidy. So we'll start there. We need to make sure our actuals, including our livestock numbers, are sound so that we've got a good base to start from. I'll share some tips around managing the livestock reconciliation and making sure those numbers are tidy and keeping them up to date. We'll work through how to create a new budget. We'll talk about where to find that quality information to build a budget that is realistic. We'll get familiar with some of the key reports, understanding the information they're giving us and how to use that information. We'll talk a little bit about information you can pick out to set some goals and track your progress. And then, as with last week, we'll hopefully have some time left to cover anything in a bit more detail and answer some questions. You should be able to pop questions in the chat through the webinar, so do feel free to do that as we'll go through, and Hamish will keep an eye on them, and we'll have a roundup at the end. So I'm just going to jump into Farm Focus. I'll just stop sharing briefly while I jump in there. Okay, so hopefully you can all see that okay there.
Yeah, we've got that, thanks.
So to move to this area here, I have just clicked plan on the left-hand side, and it takes us to what we call our plan landing page. You'll see it split into kind of 3 areas there. At the top, we've got our working plan. So that's our main budget, and we only have one main budget at any one time. This is the budget that you have, that is your most realistic scenario. It's the main plan that we're working towards. At the bottom there, you'll see we've got drafts. Now we can have as many different draft scenarios as we like. So that's where we might be looking at some different options, or we might just have a best case scenario and a worst case scenario sitting down at the bottom there to compare against. And at any time, if that draft scenario became the reality, we can use our 3 dots to set that as the working plan, and it's going to promote that draft to sit up at the top and become our new main budget. What we see in the middle here is our baseline plans. These are really, really important. These are saved read-only copies of our working plan at a point in time. So when we create our original budget at the start of the year, we want to lock down a read-only copy of that plan. We'll get a few months further into the year, we'll redo our budget, play around with our numbers, get it all up to date, and then we'll save another copy. And we've always got those copies to refer back to. We can run variance reports to compare what we've done to how we said what we said we were going to do at the start of the year and so on. You can imagine if you create your original budget, but as the year goes by, we revise it, we're revising all the time, that original budget would get lost if we didn't save those baselines. So I'll show you how to do that once we get a bit further in there. When we're looking at this screen here, you can see that we have actuals up to the end of the last completed month. And then we've got planned data moving forward from that. So in Farm Focus, as soon as a month finishes, the actuals will naturally sit on top to revise that plan for us. And we can play around with that revision line, which I will show you also when we get in there. So we'll just click into this working plan for a start, and we'll just get a bit familiar with the screen and how it looks. So you'll see up at the top here, we've got the cash flow grid for a start. This grid is all about dollars. Anything in brackets is money going out. Anything not in brackets is money coming in. When we work in this grid, we are working in GST exclusive numbers, and the GST is taken care of down at the bottom. So this balance that we see along the bottom is your true bank balance. If we click to the livestock grid, this is now all about quantities of animals. So all the values you see here are numbers of animals. And then if I just jump across to the dairy demo, you'll see in the dairy demo, we've also got the dairy forecaster, which is all about kilos of milk solids. So these in the dairy demo, the 3 screens, and in the sheep and beef, the 2 screens, they talk to each other all the time. So whether we're talking about dollars, talking about numbers of animals, or talking about milk production, they're all just looking at the same plan from different angles. This padlock here is how we save those baselines. So when we've got a budget up to date, when we're nice and tidy, we can click our padlock and that will save that read-only copy for us. You'll see here we can change the revision date. We could view actuals only, or we could throw the revision line back. So for example, if you hadn't yet coded July, we could throw the revision date back to the end of June. Then there's a few different settings and views that we can change, and we'll have a bit more of a look at that as we go through. So the first thing I wanted to talk about was just getting those actuals nice and tidy. So as I mentioned, before we look forward, we want to look back and ensure that everything's nice and tidy so we've got that good base to start from. So in this case, I'm just going to jump back into last year's actuals. And it's important to just run an eye over our coding and ensure that our coding's tidy. I've got these chevrons at the top. When we've first logged in here, you'll see we're at section level. So we're looking at everything at a very high level. If I drop down, we can see our category level, which we talked about last week when we were looking at our actuals, and then we can drop right down to extended code. So we can cast an eye over all of this. And we can, if we pick something up that's not quite correct, we can update the coding. We looked at that last week. We can go into the completed screen, or we can actually go in and view invoices directly from here. So for example, if I drop down, say, fertilizer, I could come in and view that. I can go through and take a look at that original invoice. And if perhaps it wasn't coded correctly, I could update that coding and save, and that would then update. So remembering in Farm Focus, we can update coding even once it's been locked in a GST return, so long as we're not changing the GST type. So that first step was just running an eye through the cash flow grids, and we could also, we'll learn a bit more about that at the end. There's some reports we can use to confirm our coding, but go back, make sure we're happy with our coding and our actuals. And then we want to ensure our stock numbers are correct. And this is probably what causes a bit more of a headache for people. So if I jump into the livestock grid, you'll see in this case, we've got sheep and beef, and then we've got our different stock classes that sit under each. You'll see here, we've got opening numbers, we've got the movements throughout the year to give us closing numbers, and then the stock ages up at the end of the financial year. Underneath each of these stock classes, we can drop down and see we've got the individual events. So we've got our sales and our purchases, as well as our non-financial events. So with checking our stock numbers, if we had a look and we thought, actually, do you know, those closing numbers aren't correct, I'm not happy with them. Say, for example, we've got 4 breeding bulls and we know we've only got 3. 1 had died. I can drop down those breeding bulls. I can come to that non-financial event. And from here, I can add in that 1 death in last year's actuals. If I wanted to put any further information, if there was a description or if something specific had happened, I could add that in. But in this case, I'm just going to save that. And you'll see we're now finishing with 3 to age up to the next financial year. Quite a handy thing to note is if you're never sure where stock is aging, if you just click once in the cash flow grid, you'll see it highlights that line. And we can see that aging journey at the end of the financial year. Often that's where things can get a bit tricky, just knowing where they're going at the end of the year. So again, I could click on, say, these ewe hoggets, and it's highlighted that line. And I can see that next year they've aged up to open as 2 tooths next year. So we've confirmed aging. We've added in any non-financial events that might be missing. Another important thing is to make sure that you've consistently popped your quantities in when you've coded your sales and purchases. So we could, for example, drop down these sale lambs. If I come to this line and click view, it will give me a list of all of these. And I might notice quite quickly if, say, I didn't have the kill sheet to hand when I was coding the income, I might have just popped 1 in the quantity, meaning to come back and correct it. So at that point, again, you could come in, go to the matched invoice, update your quantity to make sure it's correct.
Hey, Annie, there's just a couple of questions that before we move off stock reps, if you don't mind. So first one from Warwick Lissman. Can the sheep and beef have a forecast screen similar to dairy, or can this be done easily as is? There is a specific sheep and beef forecast.
I presume they maybe mean you can pop your quantities in and then just pop the schedule price and easily update that. We don't have that currently. It's something that definitely could be considered. I think if that's what you mean.
Well, perhaps Warwick, you could just let us know if that's the case or not. And second one from Fiona Hancock's: is it better to have stock missing or deaths if you're trying to balance the numbers at year end?
With those non-financial events, I don't think there's probably a right or wrong answer between deaths and missing. I suppose deaths is things that you definitely know they've died. Missing, you maybe just haven't quite got the tallies right. Killed, I believe, from an accountant's point of view, is anything that's been killed for your own use, so dog tuckers or anything for the freezer. So that's what killed is. The difference between death and missing from an accounting point of view, I don't think it would matter, but it's quite good to note there that if you have written any stock off and actually you've been shearing time or whatever's happened and you've got a better tally and you've written off too many the previous year, we can add them back in with found, which is quite handy. Yeah, so to answer that, death or missing, I think they're treated the same in terms of accounting, so it wouldn't matter, but that killed certainly is anything killed for home use.
Okay, thank you. And Warwick's answer was yes, okay. And there's just another question in there from Larissa Brown. Is it okay to change these actuals at this point if we've already passed these on to the accountant for the full year 23 financials, I would have thought you'd need to update the accountant if they'd changed.
Yeah, so definitely. So what we're looking at here is kind of probably one of the steps working towards processing your end of financial year. So before anything's gone to the accountant, what we've gone through just there, you should have done it at that point to give us that nice sounding board moving forward. We do see some people in their database that don't have their stock numbers particularly tidy, and they perhaps maybe just email them through to the accountant. So if that was the case, you could go in and update. But if the accountant's got firm numbers for the end of year, definitely we'd get this tidy before sending that through. So with just updating those numbers, checking our opening numbers, ensuring we've been consistent with and correct with the quantities we've entered for sales and purchases, making sure we've used the correct stock class. So I'll just quickly touch on that. For example, we've got these 1-year-old bulls that were purchased. Now, it's quite common, we might look at that, and I've spoken to husband, he said, oh, actually, they're rising 2-year-olds, and I've miscoded them with the wrong stock class. And again, it's really easy to go in, jump back to that actual, to our matched invoice, and we can update that stock class. And so when we are talking a bit later on about revision, this is something we do all the time when we revise our budget, is just go in and make sure that we've used the correct stock class. Particularly for us, we trade quite a lot of bulls, and it might say bull calves on the invoice. So I've maybe put them as a rising 1-year-old or whatever, but actually they might already be 2. So just making sure that that stock class is correct. And the big thing I think that people miss, often in the dairy industry, we see just putting those non-financial events in. If you take a look and actually you are closing with negative lambs and you're opening with negative hoggets, you probably haven't popped your births in for the year. And it's really easy to miss that because often we don't enter the births until a bit further down the track, perhaps when we've finished our docking. So we'll jump back into the future year. If you've gone back and got your last year's numbers really nice and tidy, that's fantastic. Your opening numbers will be sitting, looking as they should. If you've never taken much time with your livestock numbers in Farm Focus, the best thing is to draw a line in the sand and start fresh. So we can do that just by clicking this opening numbers column, just anywhere in the column. And it will open us up this area here where we can go through and override those opening numbers. If you did that, it will give you a little flag, and that's just a warning. It's just giving you a heads up that your opening numbers don't match last year's closing, but it's much better to draw a line in the sand, get them tidy and move forward from there. But as you mentioned, if at this point in the year, if you've already sent everything off to the accountant, it would have been great to have done this before sending that off, and you'd want to let them know if you were making any changes. So now that we've confirmed our actuals are nice and tidy and we've got our livestock numbers tidy, we want to think about creating that new budget. And for this example, in the demo, we've already got 2024 created. So for this, I'm just going to create 2025 and we can just pretend it's 2024. So when I click to create a new plan, you can see I've got some options here of what I want to use as the basis for that plan. So I could use a previous year's actuals. I could use a revised plan. So if you were halfway through the previous year, you might want to use 6 months of actuals and 6 months of budgeted data. And they're both really, really good options. But what we're really recommending now and what we see great value in is leaving it empty, starting with a blank plan. Now, when we create an empty plan, you look at it and it just looks like a huge amount of work and you think, my goodness, that's a lot to fill up. But what I'm going to show you today is that we've actually got lots of really good data in there that we can use to quickly populate that empty plan. But we're thinking about what we're doing at every step. We're mindfully copying in, say, last year's actuals, thinking about it at each step, rather than just popping in last year's actuals and thinking, well, that's this year's budget tidy, I'll leave it at that. So what we'll do today is we will work through creating empty for a start. As not that it's wrong to use a previous year's actuals, but for today, we'll work through that empty plan. So when we've got a new plan created, I always think it's a good idea to start with the income first. So we'll talk a little bit about working in a sheep and beef business, and a little bit about talking in a dairy business. So for sheep and beef and for dairy, good to jump in and sort out our livestock first. So based on what we talked about, we've got our opening numbers tidy. If we weren't happy with them, we could start fresh by clicking and updating those numbers. One thing that's a good tip in here is you can see we've got our total quantities tracking along the bottom. In a sheep and beef business, it's really good to click the view icon and tick this stock units box here and click apply. What this does is I can now see my quantities on farm, but I can also see the total stock units on farm, and I find that really useful. So as I mentioned before, we've got all our different stock classes, and we can drop down and see all those different events. I just want to talk briefly about code setup, and we did go over this last week, but I think it's important just to look at it again. If anything in your livestock grid isn't behaving as it should, perhaps something isn't aging correctly, it all comes back to code setup. So you can see the different events we've got here for ewes, and you can see it's not an option to enter births against a ewe. But when we come to lambs, for example, I've got births there as an option. So this is all coming back to code setup. And we'll just jump in there and take a brief look at that. So I'm just coming to settings and codes. I'll click farm codes. I'll drop down, and in this case, we'll take a look at some sheep codes. The first thing to notice with stock codes is I've got sheep sales and sheep purchases. You'll see it looks like we've got two codes for, say, mixed age ewes. That is one code, but Farm Focus knows that stock sits as income and expense, so the code has been mirrored to sit on both sides. So if you're ever updating codes, you don't need to update stock codes twice. That is one code, but it's mirrored. I'll take a look. Let's have a look at these hoggets here. If I click in, you can see we've got the type stock. So first things first, if you ever have set up a stock code and we can't see it on the livestock grid, it won't be set as stock. So if you've perhaps set up a new code for goats that you have, and you might have created them as income because these goats are going to make you money, you won't see them on the livestock grid. They should be set as stock. We can enter some additional information here around a settlement delay. If we pop, say, 14 days in there, it means when we enter a stock sale, the cash will generate 14 days later without us having to manually change the date. For me personally, we supply lots of different companies, so I always leave that at 0 and just pop it in myself. Each stock class has stock units attached to it, so you might want to just double check that you've got the right numbers in there. All stock ages at the end of financial year. So in this case, these hoggets are going to age up to open as 2 tooths next year. And if things aren't set to age properly, this is where you can come to adjust it. And then this breeding status is important. So those lambs that had the option to enter births against, they're set as progeny. That means we can enter births against that stock class. To select an animal as a mother, she must be set as breeding. You'll see we've also got the option for secondary breeding. And so that, in this case, is for our hoggets, which gives us a separate breeding percentage, so that poorer performance from our younger stock doesn't muddy that overall breeding performance in our reports. And then none is for our bulls and steers, or hoggets if we don't put the ram out to our hoggets. So that's just a little bit about the stock code setup, just so that we can really understand how the codes are behaving in here. So we'll just jump back into livestock. Personally, I think it's a really good idea to start with this blank. The way we work is we generally work through each stock class, talking through the different events throughout the financial year. So if I drop down these mixed age ewes for a start, and let's say at this time of year, we might want to add in some deaths. I just click add, We call this a worksheet, and it's great because it allows us to pop in additional information. So I'll click add there, and you can see we've now got those 60 deaths. We plan to sell some cull ewes in December. So I'll come up. I think the easiest way to enter the events is come to the event line and come to the month. And the reason I say that is when I now click add, it'll be sitting as a sale with the correct date. So a bit of that entry has already been done for me. When we enter livestock events, we've got the option to just leave the event date and payment date as a whole month. So generally, if we're doing our original budget, I would leave this, quite wide. But when we get into the nitty gritty, perhaps we're partway through the year and cash flow's all getting a bit tight, this is where we can get quite specific about when they will be going and also when things are getting paid for. What this means is you will see the stock leaving the farm in December in this livestock grid, but you'll see the cash appearing in January. As I mentioned, we can leave things as a whole month, and that leaves it a bit more general, but it's really good once things get a bit tighter to be more specific with the dates. So in this case, we'll just pop in that we're going to sell 600 cull ewes. We'll pop them in. The weight, you'll see here I can choose whether I'm entering a carcass weight or live weight. And then we can pop a price in, and we can choose whether it's a price per head or a price per kilo, and it will give us the summary underneath. And I simply click add. I would continue working through my mixed age ewes with any other sales or purchases. And then when I've got all the mixed age ewes tidy, I would collapse that category back up. I'll just show you entering a few more stock events there. So if we come to these sale lambs, for example, I'm going to come in and I'll pop some births in. So if I click add, I've got my worksheet. Now, when we're entering births, we want to first of all select who the parent is. So these are our three options as mothers. The reason they're on that list is because they are set as breeding or secondary breeding in that code setup. So let's pop in our primary breeders and we'll pop in, say, 4,000. And I'll just show you if we click add the following month, we might want to just put, say, 300, and they'll be the lambs born to our hoggets. So we can be quite specific and we'll get that real value out of our reports at the other end. And then just working through, let's say in December, we'll start killing some lambs. So if we pop in, had some discussions in our house last night. I said, what prices should I be popping in? So we'll click add, and I say we would just work on carrying on killing our lambs through that period. And then same with the bulls. Now, with dairy farmers, they
so
often...
Annie,
yep.
Sorry, just one question on those births. Are you able just to put in like mixed age ewes a percentage, like 150%, and it automates, or?
No, that's a wee manual calculation you'd have to do. There is talk, it has been a feature request. It would be great to be able to pop in that percentage, and it did that maths, but at this stage, no, you've got to do your maths, do your opening numbers times a percentage there.
Thank you.
So yeah, in terms of building that stock grid, we work through the different stock classes, different events to build up that whole grid. There's real value in dairy farmers spending the time doing this as well. Being specific with our quantities of cows being bought or sold, and particularly the opening numbers. If we have this nice and tidy in a dairy database, when we look at the reports, we get our income per cow or our farm expenditure per cow, and this here is where the software is looking for that information. So I'll just jump briefly here into the dairy database, and we'll just talk about the dairy forecaster. So the dairy forecaster is great. What we can do here is enter our kilos of milk solids produced each month, the base rate to be paid, And if you're Fonterra, we actually pop that information in for you, and it works out that base payment plus that increase advance to give us the cash expected to appear in our cash flow each month. If I just come to the settings up at the top here, we can specify who our dairy company is. We've got a couple set up there, or other. We can set ourselves as owner-operator, which means we get 100% of the milk check. If you are a share milker, you can set your percentage of the milk check. And if you're a contract milker, it becomes quite manual and you enter your dollars per kilo that you'll get paid in the dairy forecaster there. If you're an owner-operator with a contract milker, you would leave yourself set as owner-operator, and then you would set that contract milker, the cost of paying your contract milker up under wages in your cash flow. So once you've gone through and popped in the kilos, if Fonterra have released their forecast, we can simply click to update the prices and it will pull through the most recent forecast. So if I just click that, it hadn't been updated since the last forecast. So that takes care of it for you. If you wanted to, if you were thinking there might be another drop and you wanted to budget for that, you could overtype this. And likewise, if you think things are going to pick up, you could change that if you wanted. So as I mentioned, these payments here, they're going to show on our cash flow each month. So now that we've got our livestock all tidy, we've taken care of our milk production, we're going to jump into the cash flow grid now. So it's important to note that everything that we enter in here is exclusive of GST. As I mentioned before, the GST is taken care of down at the bottom so that we've got our true cash flow. What I want to show you first of all is using a previous year's actuals to give us that really valuable, realistic information to build our plan. So if I come to the top right-hand corner here, I can click here to pop a second set of data on a second line. So in this case, I'm going to pop, let's just say we'll put the 2023 actuals. We're kind of a year ahead of ourselves here. And you'll see now I've got this second line. So what I can do now is I can either choose to copy this information up, or I can just use this valuable information as a guide. So when we're talking about where to find this information, using line 2 is such a great tool, and I'm going to work through how we can use that now. But the other good places to go and find valuable information, there's great data on the Beef and Lamb website with kind of realistic, expected income and farm expenses for a farming business for sheep and beef. Dairy NZ have got a fantastic tool called the Econ Tracker. If you just pop ECON Tracker into Google, it will bring it up. And it's a brilliant, brilliant tool. They keep it really up to date. So including this current year budget data, they show physical trends, they show trends in income, farm expenses, and the farm expenses and income are all broken down per farm, per hectare, per cow, per kilo of milk solids. And there's KPI results across the whole country. They gather this information and they keep it really up to date. So that Econ Tracker, if you're a dairy farmer, is a great place to go through Dairy NZ. The other thing we do often when we're updating our plan is we talk to our peers. We're always asking people, what are you budgeting? What do you think? And we're talking to other industry professionals. So the bank's a great place to have those conversations. Stock agents, where they see the prices going, your FERT rep. It's important kind of to surround yourself with that wider team that have got lots of great knowledge and pick their brains about the information to put in. But coming back to having this valuable information on line 2, as I said, we can now choose what we want to do with this information. So just with our other farm income as an example, if I drop down that category, I can see here for this house rental, we've got that previous year's actuals. Now, if I click here, I can choose to copy line 2. And what that's going to do is if it was going to be exactly the same as last year, it's just going to copy that information up. So I can choose to consolidate attributes into one planned item, which is great. So let's just say you've got your multiple transactions for that rental income. You can choose to just lump it into one, or you could leave it unconsolidated if you'd like. And I can choose here to copy the dollar value exactly as it is, or I can choose to increase the price or quantity by a percentage. So let's just say in this example, I'm going to choose I'm not going to apply any increase or decrease. So that's now just copied the dollars up exactly as you see them. And let's just say for this honey income, I look at it and I think, yep, I think that's about right, but actually I think it might be back a little bit this year. So I can click here and choose copy line 2. I'm going to choose to consolidate them. But in this example, I might say drop the price by 10% and apply. And that's going to copy everything into line 2 with that 10% reduction. So you can see how you can quickly go through, and we're mindfully entering that data. You're thinking about it at every step, but we've got that valuable information there as a basis. We'll jump down now and work our way through some farm expenditure. So I'm kind of skipping a little bit, but you'd have all your livestock tidy, would work through our other farm income, and then down to farm expenditure. So working through our farm expenditure with the way things are just now, it's really important to manage and control those expenses, but it's also really important to think about those long-term impacts on your business and future profits. So lots of our expenses are up. There's certain expenses that we can't cut, we can't control too much, but there are some positives. We have had some drops in prices. Our feed's gone down a little bit, and fair prices too. So as with starting at the top, we're just going to work our way through each section. So with copy line 2, I can choose to copy line 2 at category level, and it will copy everything below, or I could choose to come to just the extended code level. So let's just say for our permanent staff, we'll just copy that exactly as it is. We'll not apply any increase or decrease. And let's just say for that casual labour, now I'm just using second line as a guide here. And I'm looking at that and I'm thinking everyone was super under the pump last summer. We definitely didn't have enough casual labour over summer. So what I can do here is, let's just say I want to budget 20 grand for that summer period. I can just pop that $20,000 in. And I've got the option here to spread. So when I choose spread, it's going to divide that lump sum out over however many months I choose. So I'll enter my dollar value, I'll choose spread, and I'm just going to spread it over 5 months. Click apply, and you'll see it's divided that value out. So in that example, I didn't copy line 2, but I used that information that was on line 2 as a guide to guide me with what to put on in my new budget. And then I can look and see these contract wages, they were for specific projects last year. I'm not going to spend that money this year. So I'm now going to collapse my wages up. It's a really good tip to keep everything nice and tight. I think if we just drop down a few, once you've been working for a bit, you can end up with things open and closed and it all becomes quite cluttered. So if that's the case, I quite often come up and I just click my double chevron here and it tightens everything back up. And then when I'm working, I quite consciously drop down one category, work in that category, and then collapse it up and on to the next. So with animal health, I'm not even going to drop it down. I expect those to be about the same. I'll just do a straight copy line 2. A few more examples, say for rates, we might want to copy line 2 with a percentage increase. I say 4%. So you can see how valuable copy line 2 is to just pop that information up into the first line. As I mentioned, we also have that spread function. So if I just come to see vehicle expenses. So I'll just have a quick look at this motorbike one. And I think actually what we spent last year, we got off pretty lightly in terms of motorbike maintenance. Generally, our services are about $1,000. So I can just pop that $1,000 in. In this case, I'm going to choose to copy it. So remember, spread divides an amount out by however many months. In this case, I'm going to choose to copy it every third month for the rest of the year. And what that's going to do is give me a quarterly payment. I can also just enter a quick dollar value. But the thing that I really like, and what I try to do as much as I can, is use the worksheets. So if I come into, as an example, say assets purchased, if I click here, rather than just entering a quick dollar value, I can click add and it opens me this worksheet. So these are really, really valuable because I've now got the option for a description. So let's just say we'll put in new motorbike. And this is really valuable for the bank manager. You know, if you pop just big lump sums of cash and think, what on earth is that for? Using that description means that anybody that's got access can come in and see what you're budgeting for. The other great value in the worksheets is that we can use a quantity and a unit price as multiplier. And we might just jump up to shearing for that example. So I'll just pop last year's actuals back on. And we'll come down to shearing. And so let's just say for shearing, I'll just copy line 2, we'll leave it as it is. But then actually, we'll take a bit of a closer look. So if I come in here and view that, you can see this has been built with a worksheet. So I've got the quantity, the number of sheep being shorn, and I've also got that unit price. So I can look at that and think, well, I know that's not what we're going to be paying the shearers this year. So I can go in and just update that unit price and save. So the value of these worksheets is having the description to put that additional information and having the quantity and unit price to act as a multiplier, which makes it really quick and easy when we're doing updates. So just to recap on the ways we can quickly build up our cash flow, we can put data on a second line and we can choose to copy line 2 to populate our working line. We can choose to increase and decrease that by a percentage. We can click once and quickly enter a dollar value with the option to repeat that or divide that value out. And then we've also got the option using add to open a worksheet to put that additional information in. And so that's a run through of how we can quickly enter their data. I jumped around a little bit there, but when we're budgeting at home, say we start at the top and we literally work our way through each category one at a time. Once we've built a plan, it's really important that we validate it and make sure it's realistic. So the first thing we've done is use line 2, which has been a great guide. And I'm just going to jump into last year's budget, which is the current year, just so we've got some information in there. So this is a plan that we've got created in the demo. And I've got that 2023 actuals on the second line. So for that quick validation, one thing I really like to do is collapse everything up really tight up to that section level. So we've now got all of our income, purchases, just that high level section information. And this is a really, really useful tool to run our eye down and make sure that we're roughly on track and that things are realistic. So I can see last year I had 976k of income. This year we've got budgeted about 813, and that's right enough. I'd look at this and I'd say, well, last year we had about 90,000 of stock purchases. This year we're only purchasing about 20 grand's worth. And I'd go and take a closer look and see if I've perhaps missed a big stock purchase. I could drop that down and I could have a look and I'd think, oh yeah, right enough, we were budgeting to buy those little bulls. And let's say maybe we're not going to do that this year. So that's fine. But it's raised that question for me to make sure that that's right enough. And maybe we had missed it. Maybe we are buying them again this year and we could add them in. And again, we could work through and we could see what our last year total farm expenses were compared to this year, or even have a look at that category level. Here, I would quickly say we've had a massive drop in wages. But remembering I had lots of contractor wages the prior year that I'm not going to have for that project that's now finished. So yep, that makes sense. I'm happy with that. So we can just work our way through as a really quick validation. The other ways we can quickly validate, if I just turn that off, I often like to look at my opening and closing balance at the start and the end of the financial year. It's always quite a good indicator to us. Well, previously we often would say, you know, want to open and close with roughly the same amount of money in the bank. But maybe in this current climate, that's not realistic, but it's just a good check to check our opening and closing. To also cast an eye along here, and it will let us know our banking requirements in terms of funds, so that we can ensure that our facilities with the bank are correct. The other quick validation that I do just while we're in here is if we jump into livestock, with those stock units turned on, I'm always casting an eye down to see if we're opening and closing with similar number of stock units on farm. So that just says to me we haven't bought in far too much stock, or sold more than we should have. Often this is different if, say, you're expecting to hold on to lots of lambs over balance date. Maybe this number will be different, but again, it's raised those questions. You're thinking about what we're doing here. So not to say that it's wrong if you close with more stock units than you started with, or vice versa, but it's just a really good check before we even jump into any of the reports, just to make sure that we're roughly on track. So I mentioned saving things, locking this down as a baseline once we've got everything nice and tidy. We can duplicate this working plan as a draft to play around with those other scenarios. So if I click new, I can use our working plan to create a draft. And this is where I might call that let's just say change in policies, change in stock policy. So I might create that, and I might go in and have a play around with altering my sheep to cattle ratio and see how it looks. You might play around with purchasing in a heap of additional stock, but having to buy in that feed as well, or pay that extra labour unit. So we can have those different scenarios going on down here, and we can run reports to compare against them. So I'm just conscious of the time. I'm going to jump into the reports now, and we'll work through a few of the key reports. First of all, before we go into the report centre, if you want to print your cash flow grid, which is really, really handy to have, we do that from within here. So if I click that print icon, it'll print what we've got on screen. If I click to the left here, it'll open what we call our report centre. So the first report I want to take a quick look at is our trends report. The trends report is a lovely, simple report that allows us to compare up to 5 years of data. And that includes the current year and a future year. So the start year is actually the end year. So I can put that future year budget and have 5 years of data previous to that. So I have to choose what I want to use for my current year. So in this case, I'll use my revised plan, and then next year we'll have next year's plan. And you'll see it just very simply lists those 5 years of information. What this does is one, ensures that that future plan's realistic. We can compare it to what's happened in those previous years. We can filter and get specific. So if we really wanted to drill into, for example, repairs and maintenance, I can click that filter icon and then choose what I'd like to have showing. I say it raises questions also. If there was a big difference here, we can go back and review what that difference is, and it will validate the budget. It also highlights unusual years and tells a story. So before maybe meeting with the bank manager, I'd cast an eye over this, and I'd be able to have a look and say, maybe there's a reason, you know, we got our tracks and races really tidy the last few years, and that's why we've not got so much to spend this year. So the trends report tells us that story with up to 5 years of data. I'll now move into the cash flow detail report. So the cash flow detail report drills into the detail for actuals and planned items. It's much like the analysis by code report, but the analysis by code report only reports on actuals, whereas the cash flow detail gives us planned items as well. So in this case, we're going to look at the current year working plan with a revision date end of July. The great thing that you might notice, first of all, is because I'd filtered in the previous report for repairs and maintenance only, that filter's held. So if we're investigating something, we're drilling into our R&M, we can put that filter on and it will hold as we move through the different reports. So again, as I mentioned, you can filter. In this case, I'll take the filter off. We can use the chevrons to choose what level of detail we would like. If we really wanted to, we could drill into the specific line detail of every single coded line. And we can also have a really good play around with the columns, which, you know, choosing which information we've got. So as an example, I might want to put on my quantity, my kilos per head of carcass weight, my dollars per head, and my price per kilo. I want to include my cents, and I'm going to click apply. So I've got quite specific columns on now, and I'm now going to filter, let's just say, just for my sheep sales and purchases. So this is a really valuable report now. I've got all the information, my quantities, say weight, price per kilo, and price per head. What this does is it often highlights if I've made a mistake. If one of these numbers was totally wrong, I might have put 1.8 instead of 18 or something like that. So this is a really good report when you're just doing a bit of a review to make sure things are tidy, and it'll highlight if you've made any mistakes, and it will let us really drill into the specifics, really get into the detail. I'll just move on now to the variance report. See, I'm very conscious of the time. The variance report is a hugely valuable and useful report. It allows us to compare two sets of data. So this is great for budget revision. When we're partway through the year, we can compare to that original baseline. So let's just say for this example, we want to do our revised budget, and we might want to compare that against that original baseline that we saved at the start of the year. So that's the value in saving those read-only copies. If I click apply, again, notice that filter is held, and if I want to get rid of that filter, I can just quickly clear it there. As with all our other reports, we can use the chevrons to collapse and expand the level of detail we've got. We've got some choices with what we see. In this case, I'm going to turn the quantities off to declutter my report and just give me the information I'd like. You can see here it gives us the dollars in each of the data sets. It lets us know the dollar variance and the percentage variance. So you'll notice if it's less than $1,000, it doesn't show us the percentage, just to keep the report simple, but any variance greater than $1,000, we see the percentage. So what this does is it allows us to see how we're tracking. If we had, say, 120%, we'd know we'd spent 20% more than we'd budgeted. And if we had a smaller percentage, if, say, for fertiliser, we'd only spent 50% of what we'd budgeted, we'd know that maybe we needed to put something else in. Maybe we missed a fert application that we're going to do in the future instead. So the variance report gives us those two sets of data, the dollar variance and percentage variance. So we're only 1 month in, so you'll see there's not much of a variance, but you can imagine as you get further through the year, there'll be greater variances, and it lets us know if we've missed anything or we need to add anything else in. So we use this to make decisions around how much money we've got left to spend on projects too. So I'll move now into the EFS report, but before I do that, I just want to quickly go into settings and production. To get the value out of our EFS report, we need to put a value on the head of each animal. So to do that, we do settings, production, and livestock values, and we enter the dollar value on the head of each animal. What this is going to do is it's going to give us an adjustment figure in the EFS report. So let's just say we've increased by 100 ewes. We'll get those dollars in our EFS report because the dollars are missing out the bank, but we've got them in the paddock. So to get that true farm performance, we really want to get these values in here, and I'll show you where that comes into our EFS report. There are conversations happening around which value you should put in here. I often think it's if you had to replace them, the true market value. So these need updated anyway. But it's your choice really what you put in here. But I personally think market value is a good place to be. So coming into that EFS report, again, we'll use this revised plan. And we just want to be specific here with the columns we've got on. If you have a dairy farming business and a sheep and beef farming business, you will need to go through and ensure that you've got the correct columns on for sheep and beef or for dairy. So we'll just have a work through this report. At the top here, we've got some physical data. So it lets us know our opening and closing stock units, the percentage change, percentage of deaths and missing, and our breeding percentage. That stocking rate has come from our how many hectares we've entered in our settings here, and it lets us know our stock units per hectare. When we move down now, you'll see we've got our revenue. So for stock, this is our sales less our purchases, and then our other income that we've got here. If I drop down the sheep, you'll see we've got the revenue from each stock class, so that's our sales less our purchases, and then we've got this adjustment. So this has come through from that value that we entered in our production settings. And if we want to get clarification around where this number's come from, we can click this adjustments token at the top, and you'll see this is where the adjustment has come from. It's taken our closing quantity times that closing value we entered, less our opening quantity times our opening value. So in this case, we've closed with 2,900 ewes, but we actually opened with 3,300. So effectively, you've got 400 ewes in the bank balance rather than in the paddock. So the software takes that cash value out of your cash position because those animals are no longer in the paddock. You've cashed them in effectively. And likewise, if you've increased, so in this case, we closed with 800 wethers, but we didn't have any at the start of the year. So there's those extra dollars sitting in the paddock. Oh, just while we're in there, actually, quite good to note that you can update your peak milking or breeding animals. So the breeding percentage is our animals born divided by our opening numbers. But let's just say we bought in 1,000 in lamb ewes after balance date. We could then update that number because we've got lambs, we've got ewes greater than what we had at opening numbers. So we can update this. If you don't want to use the opening numbers for the breeding percentage, or if you want to update your peak milking animals, we can pop them in there. So revenue, sales less purchases plus any other income gives us our total revenue. We've also got that information per hectare and per stock unit. Per stock unit class is just our sheep revenue by our sheep stock units and cattle revenue by our cattle stock units. So this gives us our total gross farm revenue, 100%. When we get down into our farm expenses, You'll notice here that this report is based on KPI reporting group rather than code. We get our total dollar value spent in each area, that spend per hectare, per stock unit, and as a percentage of our gross farm revenue. When we create a new budget or we're comparing to last year, we bring up all these reports, and this will highlight to us where the money's getting spent and how it differs from previous years. So if we looked here and say next year our wages was only 5% of our gross farm revenue, you would look at that and think, for the amount of money we're making, do we have enough staff? Is everyone going to be getting burnt out because we're not spending that money in that area? Once we get down to the total, it lets us know our farm expenses as a percentage of our gross farm revenue. So previously, a really key indicator for us was we would always try and keep our expenses at 50% of our revenue. To be fair, I think in this current climate, our expenses are sitting at about 65% in our farming business, but that's a really good indicator of how well those costs are being controlled compared to how much income you're making. So we talked a little bit about setting goals in a farming business. We set goals of our income per hectare that we'd like to hit. We set goals of our income per stock unit. We use that income for our cattle stock units or sheep stock units to make decisions on our percentage split between sheep and beef. In a dairy farming database, you have this income per cow and per kilo of milk solid. In terms of our farm expenses, I say we use this to validate if we're spending money in the right area. And definitely that percentage spent as of our gross farm revenue is a really key indicator. Once we get a bit further down, our EFS, our effective farm surplus, so that's our revenue less our farm expenses. And we can use that to compare to other farming businesses, because at this point, it doesn't matter how much debt you've got, whether you lease your farm, whatever your situation is, this is just our farm performance. Once we get a little bit further down the report, below the line, we take off our interest, our principal repayments, we take off any personal drawings, tax, capital purchases to let us know what we've got left at the end of the financial year. So the report really is true farm business performance reporting, and we use this to report on our profitability, particularly in different scenarios if we're playing around with different scenarios. There's quite a lot of other fantastic reports. I'm very conscious of the time, and I've already taken up 10 minutes more of your time than I was supposed to. So I'll draw a line there and jump to you, Hamish. I'm sorry for going over. Did you have any questions for those maybe that are still able to hang around for a bit longer? Was there any questions we wanted to answer now?
Thanks, Annie. Oh, there's just one coming through now from Georgie. If determining true market value to enter for your livestock values, is there a good place online to find all current prices for different stock classes?
Yeah, if you search beef and lamb livestock prices, they've got updated things there. We get an ag letter. We subscribe to an ag letter. It's a really good place to get current values. The farming newspapers are another good place to have a look. So yeah, they'd be the three places I'd go: beef and lamb, or dairy NZ if you're a dairy farmer, and then yeah, any sort of agricultural subscription or newspaper.
Yeah, great. Thanks, Annie. And yeah, apologies also to everyone. We're about 11 minutes over, but look, really good presentation, Annie. And I hope what you all get out of this is that it's a pretty intuitive system, but you do, to get the most out of it, you do have to play around, and the record, this call is being recorded, and the team at Farm Focus will make that available, because it's hard to take all that in one go. So you better go back and reflect on that. And but yeah, the more you put into it, the more you get out of it. Certainly from a banker's perspective, we love getting cash flow budgets where the stock rec is right, and where we've got the budget to variance ratio there, because then we can sit there and have conversations around strategy and levers rather than sit there and try and help complete a budget. So yeah, really valuable from the bank side too, if you guys get the stuff right, and for your own peace of mind, just lets you know where you're going. If it doesn't look right, you know, there will be plenty of budgets with negative brackets at the bottom this year. That's not curtains, but it means you can go back and just look at each individual line, see what you can do to make a change and minimize loss, and then just keep communicating that with your bank agri manager at Rabobank and your other professionals, because as we say, it's all cycles and we'll get through the other side. But data really helps peace of mind and helps the team around you, including your bank.
Hamish, just one last comment. I'm so conscious how much information that is in quite a short space of time. So as you mentioned, we can send this video out, but do lean on the Farm Focus team. We've got the help centre there, but you can give us a ring. So if I've skipped over anything a bit too quick and you'd like some more information, give us a call and we can help you work through it. There's yeah, the team are sitting there more than happy to help.
Great. Thanks, everyone. Enjoy the rest of your day. And yeah, thanks for tuning in.
Well,
Bye.
thank you. Bye.